Money lie number 3 is that somebody else is going to fix your financial problems. If you're a Democrat, I'm sorry to break it to you, but Joe Biden is not going to fix your financial problems. And if you're a Republican, well, sorry to break it to you too, because Donald Trump is not going to fix your problems either. The president is not going to change how much money you have in the bank, and it's not going to change the issues you have with your credit card company. You have to be the one to take care of your finances. Like what I said in the beginning of this video, guess what? Our government profits when you're not financially educated. Why? Because number 1, they're going to sell you the student loans that's making the government rich. Number 2, our government is going to tax you the most when you are just an employee and not an investor. And I can tell you this as an attorney who's not your attorney. Our tax code taxes income differently. What that means is our tax code has 3 different buckets or categories of income. There's portfolio income, passive income, and earned income. This earned income, also known as ordinary income, is the money you make from your job. This is your W-2 income. This is the income that comes with the highest tax rates and the lowest tax deductions. Then you have portfolio and passive incomes, which are 2 different types of investment income. If you go out and invest in a stock, you buy it for $100, and then 5 years later, it goes up to $200 a share, and then you sell it for profit. That's long-term capital gains rates, meaning you get lower tax rates. That's called portfolio income. That type of investment income comes with lower tax rates. So if you make $1 million here versus $1 million here, you get to keep more of that money after taxes here. Today, the top tax rate for your long-term capital gains is 20%. Here, your ordinary tax income, well, this is closer to 40%, meaning if you make $1 million here versus here, you'll be paying almost twice as much in taxes because you earned that money from your job instead of from your investments. Your passive income is a different type of investment income. If you go out and invest in rental properties and now you're getting cash flow, that's considered this passive income. And this comes with higher tax deductions and higher tax write-offs, which means you can make money and pay less money in taxes because you get to tell the IRS legally that you want to write off some of those taxes, because that's what the tax code says. Not to mention the unfortunate reality that many people use their banker as their financial advisor. When people want to know how big of a home can they purchase or how nice of a car can they afford, they go to their banker. And your banker is incentivized to sell you more loans. Now, that doesn't mean they're necessarily an evil person. They're a salesperson. They're in the business of selling loans. The bigger the loan they sell you, the more money they make. And so what people do is when they ask the banker, how much loan can I afford? The banker will always say, more. And this is where you have to be the one to get financially smart. Don't rely on your banker. Don't rely on the government. Don't rely on corporations. Build your own financial education. And unfortunately, schools don't teach this. And this is where if you want to build wealth, you got to learn the rules of the game. You got to learn the rules of money. School teaches the rules of how to get a job. And they don't always do a good job with that. But if you want to learn the rules of how to build wealth, you got to understand how our economic system works, because that's what wealthy people are focused on. They're focused on growing their incomes so they can buy more investments and how they can keep more of that money. Because, well, taxes are a big expense. And if you want to win in this economic system, you got to understand how to play in the game. Money lie number 4 is I deserve a nicer car. The average American would rather look rich than actually be rich. Now you might say that and say, no, Jaspreet, everybody wants to be rich. Well, your actions speak louder than your words. The average new car payment in America today is over $700 a month. And I'm going to round down just to $700 a month. This does not include your premium gas. This does not include your expensive car insurance. This does not include the expensive oil changes, the maintenance, and everything in between. But then what ends up happening to so many people, which is such a crazy concept, is people will work for 5 or 6 years to pay down their car. And then finally, 6 years later, you pay off your car, and then people feel weird not having a car payment. And then what they do is they trade in their car, buy a new car, pay a bigger down payment, and then you start the payments game all over again. And now you end up in car payments for the rest of your life because you think it's normal, because every single person has a car payment. And the reason why is because when you graduate college, you're 21, 22, 23 years old, you start making $50,000, $60,000, $70,000 a year. You've been working so hard, you finally want to show it off. And now that you got a good big boy or big girl job, you got to get yourself a nice big boy car, which is a nice BMW. Well, that BMW might cost you $500, $600, $700, $800, $900 a month, which might not seem like a big deal because your banker says you can afford it. But let's look at what the real cost of that is, because the cost is a whole lot more than the $700 a month, because you also have the opportunity cost of being able to invest that money, which you no longer do, because you took the money and you gave it to BMW and your banker and you said, hey, you get rich, I'll look rich. You got the BMW, you look rich, but BMW and your bank are the ones that actually got rich. If you would have taken that same $700 a month, and instead of giving it to BMW, you took the money and you invested it, I don't know, into the stock market. You did something simple. You just put your money into a stock market index fund that just meets the returns of the market. Over the last 100 years, we've seen the stock market grow by around 10% a year on average. That doesn't mean the stock market always grows by 10% a year. This is the average. And if you did this for 30 years, well, after those 30 years, you would have had an investment account worth over $1.5 million. Instead, you got a car in your driveway, which makes you look rich. Maybe you upgraded to a Mercedes-Benz, so you look rich, but you have nothing in the bank. You got to decide. What would you rather want? Do you want to have what you feel like you finally deserve, or do you want to actually earn the wealth? Money line number 5, investing is for other people. Back in the early days of me getting started with financial education, one of the things that I used to do very regularly is go into Detroit public schools and talk to some of the kids about life, money management, leadership, and everything in between. And one of the topics was how do you build wealth, and we would talk about this concept of investing, and I would keep hearing that investing is this thing for other people. Investing is this thing that rich people do. You have this mindset that I need a lot of money to start investing, I need a financial advisor to start investing, or I need to have this super smart skill in order to start investing, which is absolutely not the case. Nowadays with technology, you can start investing with less than $100. I mean, you can start investing with as little as $1 with a lot of brokerages and a lot of platforms out there now. And you don't need a lot of skills or education to go out there and invest. Unfortunately, the internet makes it seem like you have to be able to find the next Tesla, you have to find the next Amazon, you have to find the next Microsoft. But that's not how 98% of people will actually build wealth in something like the stock market. There are funds that you can invest in that you don't need any sort of real financial education or experience or knowledge to go out and do. All you can do is invest in one of these funds and get exposure to a lot of companies or the entire stock market. I'll give you a couple examples, but I'm not telling you what to invest in because, well, I'm just a random guy on YouTube. Okay, you got to do your own research, understand that investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. If you go out and invest in this fund called VTI, any stock brokerage will let you go out and invest in this fund. It's called an ETF, which is an exchange traded fund. But if you go out and invest in this, you are investing in the total stock market, meaning you're essentially buying a little bit of every company that trades on the stock market. Or you can get a little bit more sophisticated, a little bit more niched down, and invest in a fund like SPY. This is a fund that invests in the S&P 500, meaning this is a fund that invests in the 500 largest companies in the stock market. So instead of investing in all the companies, you can just invest in the largest 500 companies. Now, instead of having to research what are the best and the strongest and the growing companies, you could just invest in the largest 500 companies. There are funds for anything that you can imagine. You can invest in funds that give you exposure to technology, or artificial intelligence, or healthcare, or international companies, or dividend-paying companies. You got to do your research to see what it is that you want to invest in, but you don't need to be a genius to start investing. You just need access to the internet so you can open up a brokerage and then find the right thing you want to invest in and start funding it and stick with it and learn. Because you're gonna lose. You're gonna lose sometimes. That's the way the markets work. But if you can stick with it and keep working to grow, you invest every week, you invest every 2 weeks, you invest every month. When the market's up, when the market's down, you stick with it. When it's raining outside, when it's sunny outside, you stick with it. Whether it's your birthday or your anniversary, you stick with it. If you can do that, you are gonna be able to build wealth over the next number of decades. But it takes that discipline to stick with it, even when things get tough. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.